You saw the ruble trading in the 72, 73, 4 level for quite a while leading up to the operation. And you're right, it was a total blowout. You had the ruble basically lose 50% of its value in about, I don't know, a week's time, or got down to 140 to 1, and it turned immediately. And here we are now. You're showing that it's 54 to 1.
Well, hello there, my friends, and welcome on into Arcadia. Chris Marcus here with you, along with Bill Holter of JS Minest. As today, we're going to ask Bill, what's going on with this ruble that got hit with these sanctions from U.S. after the war in Ukraine began? The ruble got blown out initially, yet has actually been rallying in the face of the sanctions. So quite an interesting situation, and certainly if there is
anyone who's qualified
to comment on such a thing as Rocky IV appears to be breaking out, it would be Cowboy Bill Holter. Bill, it's great to have you back here digging into this because it's quite an interesting blowback. I guess that's what happens with sanctions. We haven't seen this reflected in gold and silver yet, but looking forward to digging in with you today. And real quick before we get started, today's show is brought to you by Kuya Silver, one of the companies actually going to be bringing silver in this high inflationary environment. We'll have a note about them at the end. Although with all that said, welcome on in, Bill. How are you today, and how's everything going with you?
I'm well. Thanks for having me, Chris.
Well, it's a pleasure to have you back on here. We talked about the war breakout several times a couple months back, and I think there was a degree to which the markets were figuring out how to price these things. Again, the situation is changing, and we'll get into some of the latest updates, but why don't you take it from there with the action we've seen with the ruble against the dollar in these past 6 months?
Yeah, you saw the ruble trading roughly 70 to 1 or slightly lower than 70 to 1 in the 72, 73, 4 level for quite a while leading up to the operation. And you're right, it was a total blowout. You had the ruble basically lose 50% of its value in about, I don't know, a week's time. Got up to got down to 140 to 1, and it turned immediately. And here we are now. Last I had seen it was 57, 58. Now you're showing that it's 54 to 1. It's not surprising, given what Russia is saying, that in order to procure procure oil and gas at this point, but I suspect it's going to be the rest of their natural resources. Everything is going to be priced and settled in rubles. And of course, when they announced that, they put a little addendum onto it, or gold if you wish. In other words, they're saying, if you want our resources, you've got to pay in rubles, or we'll accept gold, but nothing else. And you've gotten probably 25 or 30 countries already that have gotten on board with that. And that's what you're seeing in that chart, is that the ruble is strengthening because trading partners with Russia, in order to get their oil, to get their gas, they're having to sell whatever currency they have. More than likely, or actually probably the largest part, they're having to sell dollars, because that had been a settlement in the past. They're selling their currency or dollars to buy rubles. And that chart is showing you right there that there's been tremendous strength. The ruble has literally doubled in value since the first or second week of the operation.
Yeah, it's incredible. Again, strengthening even further than where it was before all of this began. And Bill, you mentioned that somewhere throughout this, at the same time, we've seen the dollar rally, which on one hand, okay, I get it, they're raising interest rates, yet it seems like they're a bit away from really strengthening the dollar. What do you see going on there?
Okay, let me get to that in a second. I just want to make one more comment on the ruble. Understand that Russia, the way their credit situation is, they're basically, call it 15% debt to GDP. They are a pristine credit. Even though the U.S. is and the West is probably going to force them into a default, doesn't mean they're insolvent. It just means that we are making it impossible for them to pay debt service on that debt. So compare that to the U.S. What are we, 115, 120% debt to GDP? Compare it to Japan. They're over 300% debt to GDP. Russia is a pristine credit. And I think that's going to matter as the world begins to bankrupt collectively. Russia is going to be one of the countries left standing from a paper or credit standpoint, if you will, simply because they don't have much debt. They're only 14, 15% debt to GDP. As far as the dollar is concerned, yeah, the dollar has strengthened on the USDX, but understand what the USDX is. It compares the dollar to a basket of currencies, the euro, the yen, the yuan has been included. Understand that the currencies that the dollar on the USDX are being compared to are dog crap. So you're comparing two piles of crap is what you're doing. You can't tell me that the dollar is strengthening, because if it were strengthening, we would have lower prices across the board on all kinds of products. And instead, what are you seeing? You're seeing massive inflation or massive price hikes in oil, gas, food, you name it. The dollar is weakening. So that chart you're showing, the USDX, basically camouflages or masks the fact that the dollar is inflating. It is losing purchasing power versus goods and services.
Yeah, I appreciate you mentioning that, Bill, because as you quite rightly point out, I mean, let's take a look at what they're comparing the dollar against in this DXY. I mean, that's 71% euro and Shinzo Abe yen, then tack on another 12% for pound sterling. I mean, the only thing they left out was the Zimbabwe dollar.
Right.
Interesting, as you say, that Russia seems to be the only one that puts anything behind it. And here Ronan Manley was reporting that after the initial, we're going to back the ruble with a fixed rate, then went to a negotiated rate. You can comment if you have any thoughts on what that actually means. There were some comments from Russian officials, shall we call them, that I hear were walked back. Hard to know what's actually we're supposed to take seriously these days, yet seemed like they were working on a plan to more permanently going forward back with gold and other commodities. Any thoughts on any of that?
Well, I think what you're going to see at this point, it's just oil and gas. But I think you're going to see other products that Russia produces, platinum, palladium, even food stocks, even wheat, stuff like that. I think they are going to require rubles in payment for trade with them. And they do have the luxury, and they have the luxury of not trading. They basically have said, we will weather this storm. And they really do not, I mean, obviously they want to trade because there's products that they need. But from the standpoint of real goods, they're requiring what they believe is a real trade settlement. And that real trade settlement is either rubles or gold. They're not going to take dollars. They're not going to take euros. They're done. And as a matter of fact, if you go back to even Putin's original speech just before the operation started, if you read that whole thing, he was basically saying they want something. They're done of dealing with the empire of lies. They want something real for something real. They don't want something fake, something false for real products.
Yeah, they've made that clear. There was last year when Putin was talking about how he was done dealing with the Rothschild dollar. So it doesn't seem like they're thrilled with the current arrangement. Meanwhile, we also have China, who has financial nuclear bombs if the West levies Russia-style sanctions, Beijing warns, and of course, the headlines a couple days ago were that now if China goes into Taiwan, U.S. is going to get a presence in there. A lot happening, Bill. What would you say about China? And gee, that seems like a lot for Joe Biden to juggle, I would think, but what do you say?
Uh, what I say is we are living in an extremely dangerous time from the standpoint of war slash potential nuclear war. There's really nothing that the U.S. can do if they'll do this. We will do the same thing with Taiwan that we did with Ukraine. Nothing. We can throw money at it, and that's really all we've done is throw money at it. The problem is that money is depreciating on a daily basis. But you're right. China does know that they hold a financial nuclear bomb over the head of the U.S. Treasury because they own roughly $3 trillion of Treasury debt. And we are, by the way, I think right now at the lowest point, or China is holding the lowest amount because they have been bleeding off their treasuries over the last year or two. So that number of 3 trillion is lower than what it was. But who is going to step up and buy all that treasury debt if China just pushed a red button that said sell everything? If they were to do that, you'd see interest rates 10% or higher, or you'd see the treasury or you'd see the Fed's balance sheet increase immediately by 3 trillion because they would be the only buyer. So truly, they do hold a club over the head of the U.S. Treasury.
Oh, come on, Bill. You know darn well who's going to come by and buy those treasuries when the U.S. market's tapped out. Silver Chopper Ben.
There you go.
We'll get to Ben Bernanke's comments shortly, but maybe someone who does know the plan in a world that seemingly, especially after the last 2 years, seems orchestrated at times. Here's old croaky himself, Henry Kissinger, who was out giving a speech and had a bit of a warning for China. So, Bill, I told you I was going to sucker punch you with a little bit. You weren't expecting to hear Kissinger at age 95 or whatever today, but let's take a listen.
I mean, you've met Xi Jinping many times too, and his predecessors. You know China well. What lessons is China drawing from this?
Any Chinese leader now, or all Chinese leaders, would be reflecting how to avoid getting into the situation into which Putin got himself.
Mm-hmm.
So there, Bill, I'm sure you're going to invite Kissinger to your barbecue this summer, but kind of warning from someone who seems pretty connected to the Davos crowd saying, watch out, or else they'll find themselves in a situation similar to Putin. How do you think that would play out if we see that happen next?
Well, what we were just talking about a moment ago, I think immediately you would see China liquidating our treasuries and you'd see interest rates going higher. I think that's an empty threat. I mean, I don't want to really get into this, but I mean, here we have generals now that wear skirts. So, I mean, he's talking from a military standpoint. Does Kissinger really believe that if Taiwan was invaded, that we're going to go over there, save the day, and win the war? I mean, we haven't won a war since, 1945. So I think that's a hollow threat. That's my opinion. Or he's senile.
Well, it could be both. And it seems like they just try to do the financial war these days. Although in terms of the inflation that you mentioned, someone who's been quite well associated with that, and Bill, here you go, some Ben Bernanke. He had some interesting comments. He's got a new book out, which I'm sure you've already been reading. But I'd love to hear your thoughts on a few of these wild comments that Ben had.
We also talked with Bernanke about the chances of a recession. Here's what he had to say. the more the Fed has to tighten in order to get inflation down, the bigger the chance of a recession and the more severe it will be.
The more they have to tighten, the bigger the chance and the more severe it's going to be. And they're talking about going 75 basis points. So where does that leave us?
Well, Chris, I'm already on the record that I don't think we can have more than 3 rate hikes. I think the markets will implode after the second rate hike, going into the third rate hike. I mean, you're already seeing markets that are extremely illiquid across the board. So you've also got the Federal Reserve saying that they're going to shrink their balance sheet starting in June. Well, my first question is, who are they going to sell it to? My second question is, and at what prices? I don't see any way that they really can shrink their balance sheet, and I don't see any way that they can tighten more than 3 times. They will create a financial implosion. And I think China knows this, and Russia knows this. We are an over-leveraged debt monster, if you will, and they fully know this. It's not a surprise. I mean, anybody with half a brain can understand that the West has levered up beyond all belief. And I was going to mention in when you asked me about Kissinger's comments on China, yeah, China has borrowed an awful lot of money, but China doesn't care because who do they owe it to? They owe a lot of that to the West. So if they default on it, they're defaulting on the West. And guess what they did with that borrowed money? They built airports, they built railways, they built all kinds of infrastructure, they built cities. So they default, they're left with infrastructure. We built up a huge amount of debt, way more. And what did we do with that? We ate it. We ate all our seed corn. There's none left. So when this thing goes down, you're going to see the West collapse, and China will be left with the infrastructure that they've already built. And Russia's actually not that indebted. So it's the West that's got the problem. It's not the East.
Well, it sure does seem like that. And throw on top of that, we've been hearing increased reports of food shortages. There was a warning from Joe Biden. Then certainly a lot of the guests I have on, a lot of the articles I read, it's hard sometimes to know what's real, but what have you seen in terms of the food supply issue?
Oh, you're hearing all kinds of issues. As a matter of fact, I went to the grocery store Thursday or Friday last week, and there was no cheese, there was no cold cuts. I mean, the whole back wall was completely empty. I mean, think about this. The United States, for however many years, I mean, you go back, 50, 70 years or more, the United States, if you had money, you could buy anything you wanted from anywhere in the world because it was available. Now it doesn't matter how much money you have, you weren't getting cheese or cold cuts out of that grocery store. How about if you have a baby and you need baby formula? I mean, I said probably back in 2000, I think it was 2007, 8, 9, in that era, that the plans that were being put in place were too stupid to be stupid. There's no way that anybody could come up with the programs that they have and have ever since. It has to be a plan. It has to be the planned demolition of the U.S., which means the planned demolition of the West. I mean, what else? How else are you going to think about it?
I hear you. It's unfortunate, and I think it's shocking for people to imagine that this is how corrupt it could actually be. Yet, I do fully agree and appreciate you pointing that out. Not trying to get people alarmed, but certainly things happening. I mean, I think the fact that we just lived through COVID, recent data point.
Oh, but now we have monkeypox.
I hear that's coming next.
That's the next one. So now we got monkeypox. So everybody's going to have to wear masks again. Everything's going to go into lockdown. And don't forget, we'll have to have mail-in ballots. That's another part of it.
Well, Bill, you're
I mean,
down
this,
there.
and hey, Chris, hang on one second. And monkeypox was talked about. This came out yesterday or the day before. Monkeypox was projected to come out in mid-May, over a year ago. Really? So this is no haphazard thing. It's part of the plan.
Certainly a lot going on out there. And Bill, before we wrap up, I know that you have a mining stock that you're involved with, and you had a note that you wanted to share with people. So why don't you tell people what you're looking at?
Yeah, I've been involved for the last 7 years or so since I partnered with Jim Sinclair. I'm a property guy, and I looked at this from a property standpoint. They had tried to get into production for 4, 5, 6 years. The capital window had been shut. They got new management. The company, by the way, is TRX Gold Corp. I am a paid consultant to them, but they're really at an exciting juncture at this point. Within 2 or 3 months, they should be completely built out for the oxide side of it and producing 15, 20,000 ounces per year. Already at a smaller, much smaller, about a third of that, they're already cash flow positive because their cash cost of production is under $800 an ounce. So obviously there's leverage to, as the price goes higher, their profit margin expands. And what's really exciting, as I mentioned, I'm a property guy, is the main zone, Buck Reef, is it's roughly a 2 million ounce resource, but they've discovered in the last 18 months 2 additional zones, which the cash flow from the production of 15, 20,000 ounces, pick a number, I'm guessing somewhere in the neighborhood, they'll probably make about 15 million in free cash. Their primary goal with that cash is to drill. And that was one of the things when management came on. My first suggestion was, if you get this thing cash flow positive, use it to drill, because though resources don't, they're not bid right now, I think they will be bid in the future. And as far as the future is concerned, right now they're only mining oxide, and that's only 10% of the project. The rest of the project is sulfide, and they are at this point revamping plans for sulfide, and that would make them over 100,000 ounce per year producer. So take a look at it. I would urge anybody to read the press releases, the progression of the press releases. Management has really turned this thing around and done some fabulous things in the last 18 months, and I look forward to what they'll be doing in the future.
Well, I appreciate that, Bill, and I'm sure it's good for them to have your insight, and folks can find out more about Tanzanian Gold at tangoldcorp.com.
Oh, hey, Chris.
Yeah.
Chris, one other thing, just as disclosure, because people are going to say, oh, you're talking your book, and you're absolutely right. I am talking my book. I'm one of the largest shareholders in the company, and it is my largest single holding.
Well, I appreciate that disclosure. And there you go, folks. If you want to invest like Bill, by all means, this is not legal financial advice, but one of the stocks to take a look at. And I think that's a good approach, Bill, where there's a lot of stocks that, especially you would think if gold and silver prices ever have any sort of reflection to the debasement of the currency that has been printed massively, would see some good projects do well. Again, please do so responsibly and just go and learn more about them. And Bill, for folks who want to learn more about you and the writing and interviews you do, can you give your website out one more time before you wrap up?
Yeah, you can go to jsmineset.com. That's JSMineset.com. If you do want to reach me directly, you can contact me at bholter@hotmail.com.
Well, I appreciate that, Bill. Always great to catch up with you, especially now where it's hard to know what news to trust and what's actually happening. And I know a lot of people have been hearing you for a long time, so great to get your perspective. And we'll look forward to
It's
doing
pretty
this again
easy to
soon.
know what news. It's pretty easy to know what news to trust. If it's on mainstream media, it's bullshit.
Well, that sounds like a great bumper sticker, and I appreciate you checking in. We'll do this again soon, buddy.
All right. Thanks for having me, Chris.
Well, thank you, Bill. And thanks to everyone at home watching. A few last notes before we wrap up. Did want to pass this along, came out earlier this week, where you see home listings suddenly jump as sellers worry they may miss out on the red hot housing market. Not sure if it's the red hot housing market they're worried they're going to miss out on, or the lower interest rates. But you can see the supply of homes for sale jumped 9% last week compared with the same week 1 year ago. And real estate brokerage Redfin also reported that new listings rose nearly twice as fast in the 4 weeks ending May 15th as during the same period a year ago. I would suggest that these mortgage rates have something to do with it. And certainly you can see that over this chart that covers the last year. Big spike in yields earlier this year has come in a little bit over the last month, although with more Fed hikes on the way, we'll see how that goes. Lastly, David Stein of Kuya Silver was on the KE report with Corey Fleck talking about his project. And David had some interesting comments in terms of the approach he's taking on getting Kuya's Bethania project into production. And we'll play a little snippet of that now.
For us, we felt like getting into production, even if it's a little on the smaller side, is going to be far more accretive for shareholders. And then we can start allocating that cash flow into things like expanding exploration, the next Bethania expansion to make it even bigger, et cetera, et cetera. And I think the PEA bottom line is it kind of confirms much of what we had already been, talking about and expecting ourselves. For example, the costs, both CapEx and OpEx are very, very low. That's what we always, had been thinking. And so it's nice to have some more firm numbers around that. Then the other thing that I think kind of sticks out to you in the PEA is how is the huge return and quick payback that this project has. So once it's financed and once it's in production, the cash flows that it generates, should basically pay back the CapEx in less than a year.
Well, certainly good to hear on behalf of Kuya, and thank you, David and Kuya, for bringing us tonight's episode. And to hear the rest of that interview, 15-minute call with Corey Fleck on the KE report, well, that is coming your way now.